Hey YouTube squad, it's your boy Riz. We're back for another YouTube video. Now today we're going to go over a EU short trade that I took from the 10th of February. I'm going to break down, as I usually do, from top-down analysis, reasoning as to why we got into this particular trade, reasoning why we managed this particular trade in a certain way, and yeah, just trying to provide as much value as possible. Now just before we start, be sure to smash the like button if you are enjoying the content so far. We've really upped the levels this year, and we are going to continue to up the levels as we move on and throughout this year. We will be actually out in Dubai in a few weeks' time. I'm not sure when this video is going to come out, hopefully before. But if you are out in Dubai and you wish to come to the conference that we're holding, by all means drop me a message on Instagram, riz.viper, and we can make that happen. But let's crack on with today's video, today's case study on Euro USD. So let's take a look at the chart. So at the moment, as we can see here from the daily time frame, we're at an extreme high. We've impulsed to the upside. Now, one thing I always want to put across, as you can probably tell from the videos so far, is that we believe in realistic returns and just being as genuine as possible when it comes to, you know, case studies or any content that we put out. Because our whole aim when it comes to content is to provide as much value as possible free of charge, right? With no obligation to do anything afterwards, that we don't hold back information really, even though that may annoy some of our members at times, that we give so much away for free. But at the end of the day, it is very fulfilling. The messages that I've received from the videos that we put out so far of traders who have changed their journey, you know, traders who have become profitable, sending consistent results, being funded just off the back of the free information we put out, that is what makes it all worth it. So, you know, just everything that we teach, even from our free content, you know, like I said, it gives you enough value to be able to go on the charts and mark out and begin to, you know, see the same trading style that we promote and show ourselves and use ourselves to be funded and consistently profitable in the markets. So as I said, on the daily time frame, you can see we reached an extreme low. We had quite a sharp rebound, and we began to consolidate at the highs here. So already we're looking at we're in a premium end, right? So we're looking for sells. The sells are the better play, the more high probability setup at this area. So therefore we're looking for sells. As we come down to the 4-hour time frame, we'll just get rid of this price range here. As we can come down to the 4-hour time frame, we can see the same thing. We can see that we've consolidated at the highs here. We have slowly come down. So as we go down lower to the 1 hour, for example, we'll then begin to see the structure, right? So on the 1 hour, we can see that we had previously a high that led to a new low, taking out previous lows, minor lows, as you can see. And this is really a good lesson of how you can maybe navigate the markets after an impulsive move, because a lot of people find themselves very confused after you see a move like this, where there's not really much structure to the left to work off, and they find it very confusing of how to trade after you've seen such a very volatile move. So in this case, this is how we would look to use structure. This was our last high, a new low that formed. We made a lower high and then ended up creating a new lower low. So therefore we have a new price range to work with. So as we move down to the new 1 hour, this was my high that I marked out, and here was our low at the time. So therefore we were looking again for price to come into our premium end to sell from. So when we take a look at areas of confluence and areas of interest to look for sells, we can automatically spot one very nice valid area, even from the 1 hour here, just here, right? Just here you can see that price has impulsed from here, breaking structure, meaning that we had a large influx of orders, or at least a bearish sentiment come from that area. And therefore, by marking it out, we're interested in, when price returns to that area, what opportunity could be presented. So now we can drop down to our 15 minutes. So bear in mind what we've done so far. Let's just give a quick checklist. We've gone from the daily time frame, understood, you know, where we are in price. So we're in the premium end. We've then dropped down to the 4 hour, noticed a consolidating period, so therefore a build-up of potential orders, and also again we're at a premium end. So again we're looking to for a sell opportunity as our high probability setup. We then drop down to our 1 hour and notice price ranges that we can then begin to trade from. You know, we had a bearish break in the price action, so therefore a lower low, a lower high form, and we look to sell from there, and then a new price range that's formed, so therefore we've got the 1 hour high and the 1 hour low, and therefore from that same time frame we were able to spot a POI, a point of interest, to then basically use to look for our trade entries. So at this point we've dropped down to the 15-minute time frame now, and as you can see, we're in the premium end just here, and we can see that we can refine that POI down to a 15-minute like this. Now from a 15-minute we can see that price consolidated after reaching here. Now why would we expect a reaction from here? Not just because of the POI, not just because of the structure, though those two alone are very powerful confluences that we can use, but also the liquidity. Liquidity, as I like to sort of explain it, is the fuel for the market. The structure gives us direction and is almost the vehicle, but the fuel that is needed to move the market is liquidity. So in this sense here, we can see relative equal highs sitting below our POI. So this is our liquidity right here. 2 session highs as well sitting below our POI, more liquidity to be taken into our POI. Now at our POI, so just for those who don't know, point of interest is what I'm referring to when I say POI. We can see price slows down very dramatically as well. Price slows down. Let's just get rid of the price range now. We know that's there. Let's zoom in here. And by the way, these boxes are the sessions. So this is Asia, this is London, and this would be New York. Now, as we can see, we're looking for confirmation here. Right, we're looking for confirmation. We had a very strong bullish move to the upside, and as you can see, we're getting very choppy price action here. So there might be opportunity there, but we want confirmation. We want as much confirmation as possible when trading, because that's what's going to give us a high probability setup. That's what's going to give us an more profitable edge in the market. So when taking a look here, we can see that price did consolidate, and then we did end up impulsing to the downside, breaking the previous structure. So if we just mark out the previous structural low right here, we can see that price ended up breaking the low. Now breaking the low, we're now looking for a lower high to form, and if that's the case, we're then looking for a trade opportunity, because now we have further confirmation. Because the more confirmations we can put together for a trade, the stronger likelihood that that trade is going to play out, right? And then we have to remember, at the end of the day, regardless of how many confluences we have and how good our plan may be, how high our risk to reward may be, this is a game of probabilities. So for example, we've seen top-down analysis so far, many confluences for the reasoning behind our trade, but at the end of the day, the market can do anything. We could obviously go to the opposite side and continue higher, no problem at all. And that's something you have to understand as a trader, as a sort of to help with your mindset. And it's taken from Trading in the Zone, where they really highlight the probability based mindset. You have to understand that. You have to understand that, and that is what's hopefully going to allow you to accept risk, accept losses, especially when you're following a plan and you still take losses, because it's guaranteed. The one thing that's guaranteed in trading is losses. But by having an edge and by having as many confluences and confirmations as possible, you're going to give yourself a much higher probability of having a winning trade. And that's what we're doing here. So 15-minute broke structure, taking this previous low, made a lower low. We're looking for, again, our premium end, and we're going to go investigate price action to see where our POI could be on a lower time frame. So 15-minute wise, we can see we've got a POI right here. It's quite large, so we're going to look to refine, of course, but just to mark it out, here's our 15-minute, and we can see that we get a good reaction from here. As we go down to the 5-minute though, we can see we can refine that down to a very clean 5-minute candle just here. We could probably go a bit lower and see, so like 3-minute for example does refine it just a bit further, and we could continue, but I like to keep the 5-minute. I do use I do get a bit aggressive sometimes, and you'll probably see in future videos a bit more aggressive entries, but in this case the 5-minute was absolutely fine, gives us a good area to work with, and we're still looking for further confirmation. So as you can see here, we come into the 5-minute POI. Now by this point we've already broken structure to the downside from the 1 hour, from the 15-minute as well, and now we're looking for our entry, right? We're looking for our trade entry. Now why are we looking for a trade entry? Because as I've mentioned already, we're in a premium overall for the 1 hour. We're in a premium for the 15-minute now after breaking structure, and now we have, and we can see quite clearly, very nice liquidity buildup here to the downside. We've got relative equals, we've got our trend line liquidity. As we come slightly lower here, we've got session lows that have been untapped, and more than likely we've got daily lows as well that can be taken. So a huge buildup of liquidity now. So notice that we've taken liquidity to the upside first to then target liquidity afterwards. And very powerful sort of lesson there that you can implement into your trading and sort of keep an eye on, and more importantly backtest. Remember what we always say, whatever we show here is for us, what we're kind of just showcasing how we're trading, the trades that we're taking. But you have to remember that you may see the market a little bit differently to how we see it, and the best thing you can do is get the same entry that we're showing right here and go and backtest it on your own charts and see how you see it. What perspective are you seeing that same trade from? Because that's how you're going to be able to hopefully repeat that in the future. But let's just get back to the chart here. So we can see from the 1 minute time frame that we begin to slow down, right? We have a buildup of liquidity just here. Okay, we have as well a impulse down breaking structure, right? Breaking the last low that led to a new high. So just mark that out quickly there. And we have a POI just here as well. Okay, now from here, we actually then have our lower time frame break structure here on the 1 minute. So you take this low, we'll just drop down one particular time frame. Ooh. I think we went a bit too far back. Let's just sort this out here. 1 second. Here we're looking here, just so we're not scrolling. And as you can see, we'll actually cover that in a moment. But as you can see here, price impulsing down. Let's just go back to the 1 minute. Okay, price impulsing down, breaking structure to the downside. Now, as you can see here, impulse down, and we actually get our trade entry from this area, from the retest of this order block. When we break the structure, we then have liquidity to target. We see that slow down in price action as well. We then take the relative highs, so we'll just mark that out just here. We then have the relative highs into the order block. Now entry wise, we actually had, wrong one. We actually had entry at here, 14437. We had our stop loss just above at 3 pips of the order block, and as we can see, price then continues to the downside. Now you will see a screenshot of the actual entry. Hopefully it'll be here or here, one on either side, but you'll see a screenshot of the actual entry at that point, and then basically where the first lot of partials, so the majority of volume taken off the trade, which in this case was at I believe it was at 1 to 7.5, which is roughly around here. Okay, and we'll just zoom out as to why. So we're taking the structural low, the first structural low, and obviously the liquidity as well. So the first lot of volume taken off the trade was around this area, the majority of the volume. Realistic return 1 to 7.5, so 7.5%. Banking, if we're taking about 80% off at that point, we're banking a very nice trade in one single trade in a single day. Well, to be fair, the analysis started the day before, so but the actual trade itself playing out relatively quickly, and then the rest of the trade being taken out roughly at 1 to 15 when we take the structural low, taking all the liquidity as well, and basically moving on to make a new 1 hour lower low as well. Now what's interesting here though is that you do get a re-entry opportunity. I didn't take the re-entry personally because I was happy with obviously the entry that I'd taken here at the high. However, you do get to see potential re-entry opportunity here from, I believe it's a 2 minute time frame. Yeah, 2 minute time frame just here as you can see, one, it impulses into here and then it comes back again. And then there's also an opportunity here, but we have to bear in mind that news was just coming out at the time. So it's a bit aggressive to take a trade at this point here. Because as you can see, impulse down, breaking the previous low, price came back, and there's a potential entry for you also. But the entry I took and which we went over is just here. And yeah, it was extremely powerful trade. And the reason I say powerful is because it had so much confluences and confirmations before we even got to a point of entry. One thing that we share with the Vipers consistently is that your higher time frames is where your bias will come from. Your actual trade idea comes from your higher time frame. All we use the lower time frame for, such as the 1 minute or even if it's a seconds chart, is for your confirmation and to enter only. But the actual trade idea itself comes from the higher time frame, following the structure, following the momentum, following liquidity, because that is what drives the market. That is what's going to provide high probability setups. But hopefully this was helpful. It was a trade taken. As I said, we put the screenshots there so you can see the actual trade itself, the trade entry, and as well as the take profit area where we took some partials at, majority of the volume as well. And that's one thing that we like to we're proud of doing. You know, we're not shy of saying that, yes, okay, we can capture high risk to rewards trades. You know, and it could be 1 to 100, but the majority of the volume is taken off at a very realistic and consistent return, because even that small 20% there of the trade that we left as a partial running provides, in this case, an extra few percent on top of the 5 or 6% that's already been banked. So it's phenomenal in one single trade to be able to get that sort of return. But I know this will be helpful. Like I said, go and back test that same entry on your chart, see how you see it. And by all means, check us out over on Instagram at riz.viper. Make sure you subscribe to the video. Make sure obviously you click the like button. Drop a comment on with what sort of content you want to see moving forward, and we'll make it happen 100%. But I appreciate all your support so far, and I'll catch you on the next video.